Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty and the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets have started gaining positive momentum. Previously, since last 4 months, markets have been under pressure, and previously the markets were sell on rallies. But now, after seeing the breakout from the levels of almost 17,225, the markets, the view of the market has become buy on dips, and we have been bullish since last couple of uh, trading sessions. And you can check out our previous videos also that and we have clearly mentioned that markets were under severe pressure since last 4 months, and April month could be a good month for the bulls, and any dips should be used as a buying opportunity. Now first of all, if you see, then in the last 8 to 9 trading session, Nifty had rallied sharply. We have seen a 90-degree move. There has not been any kind of severe, even intraday corrections. There was hardly maybe 70, 80 points or 90 points of dip, but that dip was strongly bought at the lower levels, and Nifty and Bank Nifty had ended on a positive note. So that is a clear sign of a faster retracement, a classical example of a trend reversal. I'm not saying that there might not be any kind of profit booking or a pullback rally or time correction. Yes, that are the part and parcel of the game. That was the heading of our thumbnail in our last video. So now let us check out the Nifty daily charts, and we'll try to figure out what could be the trend for the next week and what are the important supports and resistance levels. So now let us go to the Nifty daily charts. You will see on the screen. This is the Nifty daily charts. This was the falling channel which we have been mentioning since last couple of months, and Nifty has well managed in this particular falling channel for some time. Maybe for 3 to 4 days, it has traded below this falling channel, but again the strong support we have seen at the lower levels, and Nifty has again crawled back into the falling channel, and almost it has given a upside breakout. So these are the classical example of a faster retracement. You can see the fall from here, from February 16. Nifty has taken many days to make a low of 16,829 from the highs of 18,000. But the journey from 16,829 to 8,040 or 50, which was a swing high of the last week, it has taken in a very short span of time. So this is a classical example of a faster retracement. This is the daily charts. You can see the RSI is also in a comfort zone. Maybe some sort of pullback cannot be ruled out, but as of now the charts are positive. Let me go to the weekly charts and we'll try to analyze. Now if you can see, this was uh, if you can see the cursor, this was on the low of the support trend line, where the charts that the weekly charts was red, and we have clearly mentioned that we might see a bounce back rally or a counter rally in April month from those levels, and that has panned out very beautifully since last 3 weeks. So now, what could be the trend for the next week or for the month of April? Now, if we see the monthly charts of the Nifty, that is also becoming bullish slowly and gradually. This is the monthly chart. You can see last month it was indecisive candle, it was a high wave candle, it was a doji candle. It has a given a breakout, and we have clearly mentioned that a breakout and sustain above 17,800. 17,799 was the high of last month's monthly candle, which is March month's monthly candle. And currently you can see Nifty has closed above those levels. Currently Nifty has closed at 17,828. This is a breakout of the monthly candle. So we can imagine that the markets are poised. Uh, Maybe I'm not sure about the time, but definitely Nifty is poised to break out its lifetime high maybe in August or September. I cannot say the time because we might see volatility in the coming months because of the geopolitics which has been developing since last couple of weeks. We might see that high volatility, but this is a setup which is clearly indicating that Nifty is about to break its lifetime high, maybe in August or September. So any dips should be used as a buying opportunity. But now we will go week by week. So now let us discuss the important supports and resistance level in the Nifty for the next week. The first support in the Nifty for the next week is around 17,717 is the first support. Below that, the second support is placed around 17,597, and below that, the third support is placed at 17,502. On the upside, the first resistance is around 17,929. Above that, the second resistance is around 18,018, which is the psychological mark, and third resistance is around 18,134. These are the important supports and resistance level. Traders should try to just watch out these levels and try to wait for some correction and try to build long positions on corrections or on pullbacks. Any dips should be used as a buying opportunity. Now this is what we have observed looking at the charts. Now friends, let us check out the derivative data of Nifty. You will see on the screen the call data of Nifty. You can see that action was seen in 17,900 calls, 18,000 calls, 18,100 calls, and 18,200 calls. Now here you can see the volumes are rising, the open interest is rising, the implied volatility is low, still IVs are low. That means the trend is bullish, momentum and undertone of the markets is bullish. Any fall will bring in buying support at the lower levels. Now on immediate basis, looking at this data, the percentage change in the option premium is minor weak, but looking at this data, we feel that Nifty might test the psychological mark of 18,000 next week, and from there we might see some sort of profit booking coming in at the higher levels. But even the profit booking is seen, I don't think so at this juncture. I don't think so that it would be a severe one. But as and when the charts will develop, we'll try to discuss it in our coming videos. But looking at this particular juncture, we feel that 18,000 could be the next target for the next week, and if it sustains about those levels, then the chances are that Nifty might test the level of 18,200. So looking at this data, uh, uh, it is showing the IVs are low. That means the undertone is bullish. Now let us check out the Nifty puts data. In Nifty puts, you can see the action was seen in 17,800 puts, 17,700 puts, 17,600 till 17,500. So most probably on the support side, 17,500 could act as a major support for the next week. But on immediate basis, looking at this volume and open interest, I feel that the support might come between 17,750 to 17,700. Until and unless 17,700 is not breached on closing basis, I don't think so Nifty might see a sharp correction. So at this juncture, on the downside, 17,700 could act as a major support. So if there is any kind of pullback, traders should try to build long position between 17,750 and 17,700 on the downside. So most probably we feel that the trend is bullish. Any dips would be just a time correction, and that should be used as a buying opportunity. Now friends, let us discuss the Bank Nifty charts. On the Bank Nifty daily charts, you will see, let me show you the Bank Nifty daily charts. Now this is the Bank Nifty daily charts. In Bank Nifty, you can see there was a clear breakout, and again Bank Nifty has rallied sharply from the levels of 39,500 to 42,132, which is the close of Friday, in a very short span of time. Almost it took just 2 weeks to take the journey from 39,500 to almost 42,132. So again, as I said, the time of this rally is very short, and the time of this particular falls were time consuming. So again, as I said, it is a classical pattern of faster retracement. Now let us go to the weekly charts of Bank Nifty. Again, in Bank Nifty, you can see the candle is very strong. It is a bullish candle. It has given a breakout of multiple resistance about 42,000, but that doesn't mean we might see intraday pullback. So that pullback should be used as a buying opportunity. Now looking at this weekly candle, it is very bullish. Now let us go to the daily charts. Looking at this daily charts, we feel that next week we might see some sort of cool off on intraday basis. Why that pull off? Uh, Now let us go to the Dow Jones chart. Just for a fraction of seconds, let us discuss Dow Jones also. See, Dow has also rallied significantly from the levels of 31,420 till the Friday's high of 34,091. And after that, we have seen then some sort of cool off. I'm not saying that it is a significant drawdown on intraday basis. Dow has corrected 143 points from its previous close. So now let us go to the Bank Nifty daily charts. So looking at this particular Dow closing, I feel that we might see some sort of correction in Bank Nifty also. Maybe it could be 150 points or 200 points from the closing. But whether that should be used as a buying opportunity, yes. But at what levels, that we will discuss when we will see the derivative data. Now, first of all, let us discuss what are the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 41,798. This is the first support. Below that, the second support is at 41,502. And below that, the third support is at 41,274. Now on the upside, the first resistance is around 42,371. Above that, the second resistance is placed at 42,733, and third resistance is around 43,078. These are the important supports and resistance level in Bank Nifty. Traders should just watch out this level, wait for some pullback, and see if there is some sort of pause or a consolidation. And after that particular consolidation, if there is a breakout of this congestion, one should go long. And for that reason, I'm saying that we should have a view of buy on dips. Now let us go to the derivative data, or let us check out the derivative data, and we'll try to figure out what could be the supports and immediate resistance on the Bank Nifty for the next week. Now this is the Bank Nifty call data. In Bank Nifty calls, the action was seen in 42,200 calls, then 42,500 and 43,000 calls. Now here you can see there has been a strong positive change in the option premiums. There has been a rise in the volumes. There has been a rise in the open interest. The implied volatility is also low. It is between 10.13 to 10.96. Now looking at this particular data, we can say that on the upside, 42,200 is the immediate resistance. If it breaks, then 42,500 could be the next resistance on the upside. So the data is positive at this juncture, but 42,200 could act as the immediate resistance. If it crosses and closes above those levels, then there are chances that Bank Nifty might test the level of second resistance, which is 42,500 and then 43,000. Now, what we have been saying that we should have a buy on dip strategy. So now let us check out the Bank Nifty puts data, and we will try to figure out what could be the important support in Bank Nifty puts. So in Bank Nifty puts, the immediate support is at 41,700. Then below that, 41,500 and 41,000. Now this action has seen rise in the volumes, rise in the open interest. Implied volatility is still in the comfort zone. It is between 12.98 to 15.22. But the most important thing in this data is the significant drop in the option premium. Now, what is that indicating? That is indicating that the rise in the volumes and the dropping of this option premium is clearly indicating that smart money has done a strong out of the money put writing. That is the reason why I'm saying that on the downside, 41,700 could act as a immediate support, and that should be used as a buying opportunity. So on the downside, I feel that 41,700 could act as a major support. From that level, I'm not saying that one should go and blindly buy, but one should check out that whether Bank Nifty is taking support at those levels, it is consolidating, it is sustaining those levels, and after that, if it is breaking out that congestion zone, one should try to go long. So looking at this particular data of charts of Nifty, Bank Nifty, derivative data of Nifty and Bank Nifty, we feel that buy on dips should be the strategy, but one should wait for some cool off because Dow Jones American markets has closed with a negative closing of 140 points. So we might see intraday pullback. That intraday pullback should be watched very closely, and if that is sustained, if that takes pause, if there is no further sell off, and after that if there is a breakout of that particular congestion, or in short I would like to say one should watch out for the first 45 minutes or first 30 minutes range in Nifty and Bank Nifty, and then one should trade the breakouts. If it breaks the highs of first 30 minutes of Nifty and Bank Nifty, or if it breaks the low of the 30 minutes low of the Nifty and Bank Nifty, one should trade in that particular direction. But my opinion is that one should be bullish if there is any kind of pull off from these levels. So now friends, let us come to the final segment of our show, the positional call. The name of the stock is Reliance Industries. The result is also maybe in coming days. I don't know the exact date, but we are expecting a good result in Reliance Industries. Now, why I'm saying that? The chart is showing this trend at these levels. Now, this is the stock Reliance Industry. Now you can see the stock has corrected sharply from the highs of 2755. It made a 52-week low of 2118. This journey from highs to low has been into a falling channel, making lower tops, lower bottoms. You can clearly see. But this is the first time since December 2022 the stock has managed to break out and close above those resistance trend line. You can see 3 times or 4 times the top stock has failed to break out this falling channel, but for the 5th time it has broken out, supported with strong volumes. We can see a flag also in the Reliance Industry stock. I will show you a flag pattern also, which will give us a clear indication that the stock is showing some sort of bullish signals at this level. This is the flag pattern, flag and pole. Let me stretch so one will have a clear view. This is a flag and pole. From downward falling channel, the stock has already given a breakout. You can see this rising volumes on the daily charts. So the stock has already given a breakout. We are expecting a result. The result might be good because the stock has already showing some sort of strength at this level, and before result the stock has given a breakout. But one should be little cautious. This breakout might again bring in a pullback also. So that pullback should be used as a buying opportunity. So I'm not saying that one should go and blindly buy in one shot on Monday, but one should accumulate in a range. So looking at this particular price, volume and indicator RSI, you can see when the stock was making low tops, RSI was making higher highs. It is a classical example of positive divergence. So long-term investors, positional traders, swing traders or swing investors can buy the stock in the range of 2,355, which is the Friday's close, and on corrections to 2,300 for an upside target of 2,606. Now this target is for short to medium term. Short to medium term may be for next 4 to 6 months. It is almost 8 to 10% of rise in Reliance. So if if we are expecting Reliance to rally 8 to 9% or 10% from these levels, so you can imagine where the indices might go from these levels. So next 4 to 5 months, the indices might be positive trend, looking at this particular targets of Reliance. So any dips is a buying opportunity in Reliance. So in short, investors can buy the stock in the range of 2,355 and on dips to 2,300 for an upside target of 2,606 in short to medium term, maybe for next 4 to 6 months. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.